Hi, everybody, and welcome to the July 2024 Economic and Market Update presented by Commonwealth Financial Network. My name is Brad McMillan, and I'm Commonwealth's Chief Investment Officer. June was a good month for financial markets, with most up in the low to mid single digits. Here in the U.S., both the S&P and Nasdaq hit record highs, and bond returns were positive on falling interest rates. International results were a bit more mixed, with developed markets pulling back a bit, but emerging markets were up. Overall, though, it was a good month for markets. And these healthy results were supported by signs of solid economic growth and slowing inflation. After accelerating by more than expected in March, inflation started to drop. On a year-over-year basis, price growth fell to 3.3% in May, down from 3.4% in April and 3.5% in March. While this is still above the Fed's 2% target, the continued improvement is very good news. And along with the drop in inflation, market fundamentals also stayed strong. We saw meaningful growth in the first quarter, with the average company in the S&P 500 seeing their earnings jump by almost 8%. And looking forward, analysts expect to see strong earnings growth through the rest of the year as well. Since in the long run, fundamentals like earnings drive market performance, this is more good news. But while June was a positive month, we do still face risks as we enter the second half of the year. Despite the recent improvement, the most pressing one is still inflation, as we saw in April when a hot report caused a brief sell-off. Other risks include political uncertainty as we approach the November elections, as well as the continued wars in Ukraine and the Middle East. While so far the market impact of these has been pretty minor, they could drive up uncertainty and lead to volatility later in the year. But while those risks are real, the fact is that both the markets and the economy are still in a good place as we start the second half of the year. Market fundamentals are still strong and the economic backdrop is supportive. And those factors should limit the effects of any risks. So while we may see setbacks along the way, the most likely path forward is for continued economic growth and for price appreciation. That's it for this month's update. Thanks for watching, and tune in next month for more news. Until then, be sure to check out the Independent Market Observer blog for more timely comments and articles. Stay safe, stay sane, and stay healthy. And I hope you're having a great summer.